Everything you need to know in order to achieve profit and consistency. Trap Trader presents Becoming a Trader.
In this video, we're going to speak about risk management. This is the part where majority of traders fail, okay? It's the boring part of trading. It's not exciting, especially if you've got a small account, but people don't seem to understand the power of compounding your account. So in the basics section, we're going to keep it simple. Really simple so you can understand it and stick to it, okay? So we strictly, with this strategy, stick to 2% of your account balance. Now, whether you've got a $10,000, £1,000 account, or whether you've got a £200 or dollar account, it doesn't matter. We stick to 2% of your account balance at all times. Do not stray away from this, okay? So I'm going to teach you now how to use a risk management calculator for when you're taking the trades. Now, with the strategy, we've worked it out in a way we've give you everything that you need to make your account profitable and to get the consistency in there as well. And it's the consistency that really skyrockets your account once the compounding starts to kick in, okay? So what I'm going to do in the next video, we're going to break down now how to use babypips.com and the risk management calculator. So I'm going to walk you straight through it, okay? First thing, we come to a search engine, whatever that may be, okay? We type in babypips.com and we go straight through to the site. Now, it'll bring you to this page. You don't need to create an account or anything like that. And again, you'll hear me say this all the time. These websites are free for a reason, guys. So ignore all of this. This is just hype, okay? The banks use this information as well to see where the retail crowd is, see what they're looking at, even though they know without looking at the charts, okay? They already know that information. But what you want to do is you want to go up to Tools up here. There's some interesting stuff in here as well. But what we kind of concentrate on right now is this position size calculator. Now in here, you have got this little tool here. Before you place any trade, we teach you how to plan trades out so you know what's coming. You've got plenty of time within that to manage your risk correctly. So how do we use it now? We've got account currency. So for this example, we'll just stick it to USD, but in there, like I said, you've got all the account currencies, whether you be Euro, USD, GBP, okay? So for this example, we'll just stick it to GBP. You put your account size in. Let's just say, for example, you're starting with £200. Your risk percentage, remember what we said in the previous video, it's 2% at all times. Your stop loss with one of the strategies that we teach you, it's 30 pips. So for this example, we'll keep it to that. And we're going to be trading the Euro USD. So if we're trading GBP USD, you put that in there. If we're trading USD Swiss and so on. This example, we'll just keep it straight, Euro USD. So it's asking now for the price of GBP USD. What does this mean? Okay, up here, GBP is the base account currency. Now, if I was USD base currency, my account is USD. As you can see now, it's not asking for that there. It's up because we've got a USD base pair in there, and the account balance is USD. But because we are GBP account base currency, it's asking for GBP base currency USD base currency as price. So what we need to do is you need to get that information. Okay, don't let this confuse you. Just do what it's asking you to do. So what you need to do, you either open up your MT4 on your phone and get that information, or you simply go to your charts and get the ask price. Bear with me 1 second. Get the ask price now for GBP USD. It's as simple as that, guys. So when this pops up, down here you're going to see my watch list. So I'm looking for the ask price of GBP USD, and as you can see, it's there, 1.2766, the ask price. So I take that information, 1.2766, I come back over here and I type it in there, 1.2766. Now when I've inputted all that information, I simply click calculate, and it gives me now the 2% risk, the lot size I can use on a £200 account size with a 2% risk and a 30 pip stop loss. I then take that information and I put it into my MetaTrader 4 before I place any trade. I'm risking £4 on a £200 account, and the risk reward that we use, the ratio, the first target is 2-to-1 risk. Okay, so that's a simple way to do it. And like I said, don't let this confuse you. If it asks you for that, the ask price, you simply go and get the ask price from whichever currency it's asking for. Okay, right, I think that's simple enough. I don't think I need to run through it again, but if you do get confused at any time, if I didn't explain anything in this video, please ask away in the chats, message myself or one of the leadership team, and we'll walk you through this again. So for those of you that don't know what risk management is, it's basically just using an allocated percent of your account balance per trade. Okay, with this particular strategy that we use, this one's called the M24. You will, this particular setup's called an M24. You will learn this in the course, but what we're going to talk about here is the risk management behind it. And I am going to keep it basic. I'm not going to overcomplicate this because this is just the basic section, but the risk reward ratio that we use for this certain particular setup, okay, is a 2-to-1 risk reward, and there's a reason we do that. In the live sessions that we do, we'll actually go in and dig a little bit deeper into that, but for this example I'm just going to explain why. Okay, so this tool, it gives you your calculations that you need, and it gives you the stop loss down here once you start messing around with it. Okay, you can move this bit, move this section, and you can also move this section up here. So this 25.1 is the pip value, and that's what you need to set it to is 30. So just bear with me while I do this. So as you can see, we're now set to a 30 pip stop loss from our entry point, and we aim for 60 pips. Let's drop that down, 60 pips, and as you can see, that's a nice 2-to-1 ratio. Now with this particular strategy, we're running around anything between 7 out of 10 trades or winners. Sometimes, obviously, nothing's guaranteed. We might lose 5 trades in a row. You know, we all know that we can't control these markets. But the win ratio with this particular setup is pretty high. As you can see, this one's playing out nicely. So this is how you use the tool. Now, we've gone through a TradingView setup video, which is somewhere in the back office, so you need to find that video. If you can't find it, again, message one of the leadership and we'll direct you to it. But in there, it teaches you how to set up your TradingView in case you don't know how to do this, and how to set up this toolbar down here. As you can see, you've got short position, long position. You simply click, hold it over the screen where you want it. Obviously use your cursor to do that. Click on your entry point, drag your stop loss to 30 pips and your TP to 60 pips, whatever that figure is. Okay, this is not accurate for this example, but over here it gives you the stop loss to put in your MetaTrader 4, your entry point, and obviously your take profit. So I hope that explained now how we find our stop loss and how we find our target area and what this little tool does for when it comes to risk management.